How worried or otherwise are you about the fact that we've now seen some key sectors sold down in the United States and an apparent desire to move to the safety of treasuries and other less risky assets?
Well, first of all, I think that we should not overreact to market movements, even if those market movements are sizable. And the second thing is that one needs to start from realizing that some valuations were stretched to begin with, and that in a context where interest rates are going up and where growth prospects are significantly revised downwards, that this is something that is going to take some steam off equity markets. But for the time being, I would de-dramatize the situation and just remember what we have. We have a global economy which is still growing strongly. We have a U.S. economy which is still growing strongly. And the expectation and the forecasts are that both the U.S. economic growth and the global economic growth are going to keep at good rates for this year and next.
The IMF this week has revised lower its growth expectations. They still look reasonably strong, but it's just chipped them down a little as it's expressed concern about the trade war between the United States and China. You operate in this part of the world. Are you seeing any evidence starting to emerge that this is affecting business decisions and the kind of actions that would involve your clients?
Yeah. Well, naturally, these trade conflicts between the United States and China are having some sort of an impact in terms of confidence. And this is being reflected in terms of investment. Investment now is not growing as fast in many parts of the world, particularly in emerging markets, as it was previously the case. So there's been a moderation there. And also trade has been moderated in some respects. So that is certainly something which is being noticeable throughout our footprint. And fortunately, that has not translated into any increase in loan impairments or anything like that. On the contrary, we're going to lower impairments now than we had in the past, and I think that's a good sign. But yes, this moderation of global growth is being reflected in both investment and trade. In some way, not dramatic, but there is some impact, and this is something which is to be expected given the impact on confidence, because this is something which is not good for anyone in the world, including the two countries which are engaged in the trade dispute in the first place.